Приветствую всех на звонке ROS.
We're happy to welcome everyone at this ROS AGRO call with investor presentation, their results for the first quarter of 2021. I'm Svetlana Kuznetsova, head of IR at ROS AGRO, and I'm going to coordinate this call today. The presentation will be run by Mr. Maxim Basov, the CEO of ROS AGRO, in Russian with simultaneous interpretation into English. After the presentation, we'll run a Q&A session where Mr. Boris Chernycher, the CFO of ROS AGRO, is going to assist with answers. You're welcome to ask your questions orally by raising your hand. That's a function here in Zoom, or typing your question in the Q&A window of Zoom. This call is going to be made available as a recording in both Russian and English on the website in a couple of days. We'll start with the presentation now. Over to you, Maxim. Good afternoon, ladies and gentlemen. We did have a very good Q1 indeed. That's the best result through our long history. The company demonstrated some good revenue growth with 17 billion rubles. It's nearly 50 billion rubles in terms of total revenue in Q1. All of our businesses have gone up, especially oil and fats. As you can see, it contributes about half of the company's revenue in total. And the same is going to be the case in Q2. Our EBITDA numbers are nonetheless impressive. The best EBITDA throughout the company's history, I mean Q1, the best Q1 in the company's history. And importantly, all of our business units demonstrated the best performance. Some of those have set their records. I'm talking about the oil and fats, as well as the agriculture. So our debt is down somewhat, which is partially explained by seasonality, given the inventories are down normally at this time of the year. As of the 31st of March, the company's net debt to EBITDA went down to 1.6 times, which is pretty much below the target that had been set by the board of directors. We can proceed to page 7 of the presentation now to demonstrate exactly what I have just explained. The company obtained some very good operating cash flow. This comes as a result of our strong financials, and also thanks to the reduction of net working capital. We have kept investing in Q1, albeit less than last year. Most of our investments had already been delivered in the previous year and are being finalized this year. Thus, we have obtained some very good free cash flow as well, which has resulted in deleveraging the company significantly. Now, let's consider the events of Q1 in relation to each of our segments, starting with oil and fats. Just as explained, this is the largest business of ours. The sales is quite significant, and the EBITDA as well. The highest ever. Q1 is traditionally the weakest quarter for the company in the year, given there is no output in agriculture. But we had a very good first quarter nonetheless, with most of the commercial revenue coming from this segment. Most of this growth is explained by higher prices in the global markets. In Russia, we have 3 segments within the oil and fats business. Each of them is quite large. We had 3 oil plants, 2 in Samara and 1 in Saratov regions. Traditionally, we have the highest capacity utilization in the industry, nearing 100%, which explains why our performance has been so good. Our other segment, following industrial fats, is consumer, the oil and fats products. Quite unfortunately, we have to comply with the pricing agreement to sell the oil in retail chains. But on top of that, we have other products such as margarine, or cheese, or spreads, or mayonnaise, or ketchups. And then on top comes a very significant exports volume. We are the largest exporter of oil and fats products from Russia. Importantly, the exports market gives us more profits than the Russian domestic market. Industrial fats is also performing quite well. We import uh, oils, produce all sorts of other fats and oils for the confectionery business and for the dairy business. And again, we have had our best performance in industrial fats across the first quarter, across our history. So that business unit has been very good. 3 billion of EBITDA. So this is a very good margin for this business. And the sales was as high as 27.6 billion. Now, agriculture, page 10. Just like I said, there was no output in Q1 for seasonal reasons. We had some inventories remaining, but nonetheless, it gave us 3 billion rubles of EBITDA in net profit. The margins here are not record high, but still one of the highest levels in our history. Despite the soybean exports duties, the same comes with rapeseed, corn, and barley. Nonetheless, we have managed to sell our products rather with a profit and make some good money with that. Next comes sugar business, page 11. It comes third in Q1 in our internal ranking, considering the margins, but it could have performed better, perhaps. This business also faced a pricing cap, so we have to sell sugar to retailers at 36 rubles. That's basically per unit price. But again, we are the largest producer of consumer products with very well-known brands that are popular with the country's population. So we don't sell the full bags. We sell pressed sugar and retail packed sugar. It's still converted into 36 rubles per bag. Uh, but thanks to our brands, we managed to make some more money on that. We also sell a lot in the B2B market, which is performing very well. The retail market has the price equivalent, shelf price equivalent of 36 ruble per bag, but on the B2B side, it's well, okay, not quite high. It was 37 rubles, but VAT excluded. The 36 rubles number I have mentioned earlier does include the VAT, which translates into less than 33 rubles with VAT excluded. While on the B2B market, we're selling at nearly 38 rubles VAT excluded, which is nearly 4 rubles higher than the retail price. On top of sugar proper, we also have sugar uh, which is more refined. That means high quality or brown sugar as well. And here we have a higher price too. So even though we sell a lot of sugar to retailers at a regulated price and we don't get the money in quite significant volumes, because of the cap, nonetheless, our margins is quite good at 26% in Q1 2021. The next business unit which has delivered less EBITDA to us, but nonetheless, it is an improvement year on year. That's the meat business. Production growth is still underway with meat price higher in 2021 as compared to 2020. I'm referring to pork. Well, unfortunately, soybean and sunflower price has been higher than last year, but we managed to ramp up our margins to 26% in this segment. There is no price cap agreement on meat. However, we are trying to contain the price growth in retail chains, and we have a negative margin currently. But generally speaking, the B2B market is going to stabilize. The prices are likely to come down. The current situation with pricing is explained by a significant growth of poultry prices, and pork is going to catch up. So 26% is some good margin, and we intend to retain it looking forward. Our consumer products in the meat segment are demonstrating some very good performance as well. Volume-wise, we are increasing production quite significantly. We have completed installation of a new workshop that would enable ramping up our production capacities by nearly 2 times, starting the summer this year. Colleagues, I'm very proud to announce that all of our business units have performed very well. We demonstrated record high performance, and we are confident about Q2 with some very good numbers coming from that. Anticipating some of your questions, I can say that today we are currently in the sowing season with more products being sowed. We have some beetroot still remaining in the pipeline, some of the sunflower, and small volumes of soybean. Crop rotation has been changed this year. We have more volumes of land or dedicated to soybean and sunflower, and we have expanded sugar beet as well. The sowing season is going to be completed by the end, or rather mid-June. Well, in the second half of June, let me put it this way. We'll have a press release readily available for you with our results at the time. The fourth oil extraction plant in Unsurisk started production. It had been suspended for 18 months, but now with the government approach to agricultural exports changing, we have restarted production. So in Q2, we're going to see the outcome, their performance. Thank you. We're happy to take your questions now. I don't have anyone raising hands as yet, so let me read from the Q&A section of Zoom. Considering growth of your margins pretty much across the board and continued growth of global prices, do you see a risk for the domestic market to be regulated even more by the government? Yes, we see some risks. The risks are always there, and we are there to manage those risks. The changes in government policies that we have observed in the past 5 months could hardly have been imagined just some time ago. So we are closely observing further changes, and I hope we'll manage to go ahead with that thanks to our strong assets and a very strong team. The digital transition in agriculture is at full swing, which is really helping us. We'll manage to be making some good money in the end and make our shareholders happy with good results. Generally speaking, that situation is understandable. Commodity prices are growing globally, which is related to more money available in the markets. This is related to climate issues and certain regional issues, higher oil prices that have recovered, and the concept of what they call imported inflation is definitely there, especially in Russia, where consumer income has not been growing in the recent years. Markedly, the structure in domestic consumption has changed, and Russian people have stopped their foreign travels, so they have more money available to spend for food, among other things. Hence, we see some good demand nowadays, especially for cheaper products. And our business is mostly about the mass proposition. We see very significant demand coming from foreign markets too. The most important thing for now is not to have any exports ban. Obviously, prices could be regulated, duties could be imposed, thus taking some of our shareholders' income. But the most important thing is for us to carry on, even in the adjusted market conditions. Given the high momentum in the industry and lots of investments into technologies and production facilities, it's important to keep producing and shipping our goods. For some of our branches, like oil and fats, for example, the domestic market only accounts for 25% or less, but so we hope we'll carry on with exports. Thank you. I would like to hand over to Mr. Nikolai Kovalyov now. Nikolai, hello, can you hear me? Yes. Thank you. Hello again. I have three questions, if I may. My first couple of questions relate to the sugar market. We're nearing the start of a new agricultural year, and I'm wondering if you have any preliminary market data already available, like the sowing area for beetroot and the total crop. And then another question on the sugar market. We have seen some media reports about further regulations of the sugar market for the upcoming season. Do you see something of the kind in your discussions with the government regulators? Do you see any signs there would be further regulations? And my third question is about EBITDA. We've seen your EBITDA doubled as compared to the first period of regulated pricing. I'm wondering what you're budgeting for the full year of 2021. Are we to expect any EBITDA growth year on year for the full year? Thank you. These are my three questions. Okay, beetroot. We're now completing the sowing season. I believe that it's going to be completed before the end of this month across Russia. We expect 950,000 to 1 million hectares to be dedicated to beetroot. I personally believe it will be slightly less than 1 million, but let's imagine it's a million, okay? Then we'd see the conditions throughout the summer. I can tell you now that the sowing season happened later, 2 or 3 weeks, depends, which means a loss in the vegetation period on the one hand, but on the other hand, we see a good supply of moisture in many regions. That's exactly why we're having this delay. It's not only about the cold and slow warming, but it's also because of the moisture in the fields, which made it difficult to arrive in. So it will depend on the temperature, so it's hard to tell now how much yield in sugar we'll be getting. Russia normally consumes about 6 million tons. Some of the sugar goes to Middle Asia, but the market is going to be balanced, more or less. That's my view. Then we need to understand the situation with the Russian ruble and its FX rates. Unless we see any major event in a negative sense, the ruble is expected to strengthen. We expect it to come up to 74 to 72 rubles per dollar, but no one can exclude, of course, any challenging political or even military scenarios. And then comes the question of the global price. For the first time in 8 years, global shortage of sugar is expected. Global shortage does not contribute to low prices, of course. Shortage of sugar is explained by the fact of droughts in Brazil and a huge demand for bioethanol fuel. So Brazil is going to produce less sugar. Sugar is available in India, but India is facing real trouble with COVID. So India is not going to yield significant or sufficient volumes of sugar. So it's hard for me to tell. I would really abstain from commenting on any actions from the government. We do not support government oversight in this regard, but will definitely oblige by all resolutions of the Russian government. Just like I said, we have invested more into sugar beet production this year with more space dedicated to that commodity. So sugar output is going to grow this year. Last year, the um, year was not really good for sugar beet. It was a lucky year for the other crops, but it was not so good for sunflower, sugar beet, and sugar production went down by 35 to or 30% year on year vis-a-vis the record high year of 2019. So this year, the situation is going to get back to normal and we'll be producing about 1 million tons of sugar in total. We'll have more sugar available and then we'll be looking forward to what the government decides. We have quite a lot of channels and quite a lot of opportunities. We'll keep going. That was your first question. Now comes your other question about what? I can remind you. My last question was about the full year guidance. I understand it's too difficult to say as of now with the new agriculture season not yet starting for any of your commodity products, right? Yeah, well, I can tell you that the biggest uncertainty here is the government policy. You see, our Q1 turned out to be a record quarter for us. We are into mid Q2 already, so Q2 looks to be a very good one as well. Then a lot is going to depend on the weather, but the sowing volumes are quite good. There is no delay pretty much, so I expect some good crops to come. I hope. All of our facilities are ready to process the commodities. The global prices are high, so we are looking forward to a good year. There are climate risks, of course. There are government risks. We're always optimistic about the situation, however. In autumn, we'll be launching our large project in Primorye region. Uh, the slaughterhouse online will be coming to the market. So generally, the year is going to be a very good one. Okay, thank you. That's clear. Thanks, Nikolai. I'm going to ask a question from the Q&A section of them. What are your thoughts about developing exports with Rosagro? The share of exports is slightly up year on year with 32%. Whether the company has plans to ramp up to 50%, let's say, in 3 years to come. And a quick follow-up question. What markets, what products, and what geographies would be your priorities? Thank you. A few years ago, we adopted a program to expand our exports, which has been quite successful. As of now, we are reconsidering some of the prospects, given the fact that the government policies are changing. But again, with the domestic market not growing, given that the population is coming down in terms of numbers, and no one is expecting all the Russian population to get rich quickly. But technologies are developing, so we'll be still investing in a targeted way, in a highly efficient way. These additional volumes need to be sold abroad. So we're really hopeful that the Russian government would allow Rosagro to keep exporting. And if that happens, we'll have growth of our export share and higher exports revenue. The situation is very different for each of our segments. Let me start with the largest segment of ours. Some good prospects are available in at least two subsegments. The resource base in Russia is very good, so it's very good to make oil in Russia. We have already decided to expand in our capacities, the two facilities in Saratov, and we are looking into new opportunities with new sites. we're looking for new opportunities at existing sites and will at other sites than Saratov. Most of our oil goes to Middle Asia, Iran, um, countries of Northern Caucasus, and Turkey. These are our main markets, although sometimes we reach out as far as China. Meal, the largest market here is Northern Europe and then China again. And the Mediterranean look to be some very interesting markets as well. Consumer oils, again, we are the largest producer in Russia. In this regard, with our main markets lying in Middle Asia, China is important, and basically all other markets are growing, although they're not as important. Most of the potential, most of the upside resides in China for our bottled oil. Industrial fats are not exported, only imported, but we intend to ramp up this production line as some of our confectionery businesses in Russia are growing their exports. Hence, they have to consume more of our production, which we deliver, among other things. Let me comment on the meat business now. We're rather successful in Vietnam, Hong Kong, and Belarus, and also Ukraine. We would like to sell more, but at this point in time, given the shortage on the poultry business, and no, not shortage, that's the wrong word, given the high prices in poultry, chicken, um, the prices are quite high and it's not favorable to um, export um, the meat, but we are exporting nonetheless, especially with the offals. And with the launch of our Primoria project, we'll be ramping up as well. As for the agricultural business, given the changes in the government policy, we'll be processing most of that rather than exporting, if at all. Sugar, that depends on the production volume. I don't think production in Russia will be growing, given further uncertainties in government regulations. However, we have decided that we try exporting consumer products, especially towards China and Middle Asia. So we'll be ramping up exports towards these geographies. Basically, yes, I think exports will be growing, and share of exports in our revenue will depend on the prices, global prices, the FX rate of the ruble, and the government policies. Arthur, thank you. Good afternoon. You can proceed with your question. Hello, can you hear me? Yep, fine. Congratulations on your very good performance across every segment. It seems that government regulations are helping you rather than otherwise. No, quite unfortunately, we would have made more money but for the regulations. Okay, I have several questions on some of your segments, starting with sugar. A tactical question rather than the strategic one. The margin is higher in Q1 as compared to Q4, and the cash cost of production per 1 kilo of sugar is significantly down. I understand you have changed your mix between B2C and B2B, but maybe there are other drivers as well. So my first question to you is why the margin is up and the cash cost is down, although I understand that the beetroot price, which is the core of the cash cost, remains unchanged. My other question is on your meat segment. Maxim, I understand the situation is not that stable given the prices on chicken, but you have the margin here at 20% in the meat business. How are you going to make that happen if the prices come back to the normal levels? And whether you believe that 20% of EBITDA margin is sustainable for this segment? And on a number of occasions, you've mentioned there is no reason to believe that poultry prices, or sorry, pork prices are going to grow significantly, um, given no competition against export. And my other question is on the oil and fats. As far as I get it, the extremely high sunflower price has already been factored into the margin of Q1. So it's not going to be there for Q2 and Q3, right? Okay, let me start with your question on sugar. You're quite right. The cash cost to produce sugar depend on or exposed to three drivers basically. Beetroot price. Indeed, all of the beetroot had been bought out by December last year. But then uh, um, it depends on how you calculate the average price. I understand we have a dedicated procedure to that in our accounting. If I remember that correctly, the sugar price was the highest. Hence, beetroot price was at its highest as well. Then the government pressed against it. Sugar prices went down. Hence, beetroot prices too. So the average price of our inventories started coming down as well. That's one thing. And another thing is the volume. Given the fact that fixed costs are divided against the volumes, you can see how much we sold in Q1. Again, the intent was to sell less because now we have 35% less sugar than last year. But we've been asked and by the government, and we sold more. So the volume has played into the hand as well. Another driver, we have um, the sugaring business. For the molasses desugarization, um, which is going to be launched now. It was not factored into Q1. And here are a few more price drivers. Please open up page 11. You can see that the price is going up. It's 41 in March, about like that in April. So the current price in Krasnodar is 44 rubles, even higher. So the price on B2B segment is up as well. It's also important to understand what we sell on the B2C side. Um, most of the chains are happy to buy packaged sugar under our brands. That's what we sell to them. So we have to spend money on. It's very efficient, but nonetheless, and the economics works a little bit better for us as compared to sales of bulk sugar to retail chains. So there is no magic. That's our accounting, but it seems like that. 26% is a very good margin, and it's going to be there. We don't have too much sugar left, however. 140,000 tons, and that's it. And it needs to last, given that the sowing season came later this year. The farmers are not going to dig up the sugar beet too early. So sugar production will be restarted this year at a little bit later date. So how that small volume of sugar remaining in our inventories, how to distribute that across the upcoming months, that's a good question. But responding to your question, we expect good margins in the sugar market to remain. We'll may need to sell more to some of the chains, given that there is very high demand from the chains, even higher than last year. I still believe it's a temporary thing. And basically, the situation is going to be not so bad. Now, on the oil and fat side, again, pretty much the same drivers. We are the largest producer of sunflower oil with huge volumes, really. We process 1.5 million tons of sunflower. It's sold at record prices, and we store that at our own storage facilities and at other people's facilities across various regions. That's why the cash cost varies significantly. But in the big picture, in the big picture, we can say that in Q2, uh, oil extraction is going to produce similar results. On this industrial fat side, palm oil is quite high price wise, $1,250 if I'm not mistaken. Confectionery business is doing great, uh, though the high oil price drives down the economics of consumer products, and um, sometimes we even sell at a negative margin for packeted oil, and we're sometimes incurring even losses or hardly breaking even for mayonnaise. So the margins are going to be generally lower, but oil and fats are going to get some good numbers still of 10 or 11%. Now comes the meat segment. We are surprised indeed about the prices attained. As I have explained, this is related to the fact that in Q4 last year and Q1 this year, uh, the poultry business really plummeted globally for several reasons. Uh, a lot of poultry was dying because of diseases, and then exports of eggs from Europe was banned. Um, then corn prices were high in Q4, and many of the smaller businesses, smaller companies who have lost their poultry due to mortality, they are not so keen to restock their farms. So basically, production of pork was expected to grow by 10%, but it did grow by 5%. That's why the situation on the consumption side, well, very few people travel abroad these days. They don't spend the money, they have it to spend on food produce. As a result, the price is high. I agree with you, the price is set to come down closer to autumn this year. It has started adjusting already, but it's going to come down by autumn as poultry production, as chicken production restarts. The current economics globally is based on the high prices which were there before the exports duties were imposed for corn and grain. So grain prices are going to come down together with meat prices. Since sales and production of consumer products is growing with our business, we expect to keep the margins at 20% or so. 15 or 20% is quite realistic. We're still hopeful about 20. Thank you very much, Maxim. A few, let me say that, a quick follow-up question, which I uh, didn't produce upfront. Given the complexity of your business with so many elements and drivers coming into play that would affect your financials eventually, still, what's your take on the effect that the FX changes have on the eventual performance? I understand that the weaker ruble uh, plays into the hands of Rosagro, although a weak ruble, although a strong ruble, is favorable for you as well. So do you have an understanding? Do I get it right that Rosagro is a net beneficiary of the weak ruble? I can put it this way. Early in our history, we really benefited from the weak ruble. Like with 1% weaker ruble, we got 3% up on the profit side. I remember that calculation many years ago. We repeated it recently, and a lot depends on the actual prices. Given the contribution of the business units would vary significantly depending on the dynamics of the global prices. as of now, we are pretty much non-sensitive to the FX rates. We somewhat benefit from the weaker ruble, I would agree, somewhat, but given the government policy, we can say that we are pretty much not exposed to the ruble. Some of our businesses really benefit from the weak ruble. First and foremost, it's about oil and grain and offal. Some of the businesses do lose, such as industrial fats or consumer fats and meat, because meat consumption does depend on the purchasing power of the local consumers, which are exposed to the weak ruble in a negative sense. So, as of now, it's a quite well balanced situation. Thank you very much. Thank you, Arthur. Over to Alexander. Alexander, hello. Hi, colleagues, hello. Thank you very much. Congratulations on your performance. I have two quick questions. First one is about CapEx guidance for 2021 with the segmental split, if I may. Okay, there we go. I can tell you that, um, well, metal prices are growing, the ruble is demonstrating some effect movements, but if you consider the current perimeter, excluding any M&A optionality, so if you exclude that, if you exclude any potential M&A investments like last year, we spent about 15.5 billion rubles in cash. Last year, our capex started coming down as compared to 2019. Back in 2016, we invested 17.7 billion, then 17.6 billion in 2017, 16 billion in 2018, 7.2 in 2019, and then 15.6 in 2020. Given the very favorable financial situation this year, we've decided to boost it up a little bit, and some of the projects which we didn't go ahead with last year because of the timing, among other things, well, all of those have been pushed down into 2021 with the hope to cover and complete pretty much all major investment projects that we can. So that ends us up with about 20 billion rubles of capex this year. The largest amount would go into the meat business. Here we intend to invest about 12 billion. And the largest bit here is about the Primoria project, which is due to be completed soon, and also the slaughterhouse expansion in Tambov region, and a new workshop for consumer semi-finished products. The rest of the pack is really insignificant. Next comes the agriculture business, which is mostly about acquisition of land. We could possibly spend about 3 billion towards agriculture. Then comes 3 billion of oil and fats and sugar, which is the gold cow for us. That's 1 billion. Okay, understood. Another question. Given the fact that your net debt EBITDA is significantly down, could we potentially expect higher dividend, or would you rather focus on M&As? Thank you. It's tough to tell. A lot depends on the opportunities available in the market. We would really love to do some M&A, but as of now, the company and the board is very united in this sense. We are not, as a company, we're not ready to pay more than what we find sensible. We're very conservative about the M&A transactions. So I think it will depend on the board. Let me put it this way: we have a strong cash position, having paid record high dividend for 20 2020. So if we don't get any major transaction approvals, then we'll be paying dividend, of course, because keeping the monies on our account has never been our preference. Never did that. Um, some of the bidding is expected to happen for a major asset, but in terms of the total cash flow of the company, it's still an insignificant amount. So on the board level, I stand in favor of paying some good dividend, at least 50%. But some of the money yet available could be paid out too. I believe, especially as we move closer to the leverage of one. So we could potentially update our dividend policy. Having discussed, we have not done it formally yet, and we could potentially transition to free cash flow dividend. Again, a lot will depend on the investment opportunities we see looking forward. Understandably, a long-term investment cycle has pretty much been completed here in Russia, so we'll be definitely be paying dividend. Thank you. Have a nice day. And I suggest that we take just a few outstanding questions. Can you please explain why you have decided to launch the soybean in Primoria this year? Uh, Primorskaya soybean in Primoria, that is related to two reasons. An export duty started with 30%, and now we hear it's going to be reduced to 20%. And secondly, very huge demand on soybean oil, and generally speaking, every type of oil. From so that demand is coming from Asia. Thirdly, we are launching our own production of meat, which uses soy meal and soybean oil, which is expanding the markets. But that's why we believe it's feasible to launch this particular facility. When do you intend to hit the market with some first production from Primordium? In September, we intend to launch our facility. The slaughterhouse is going to be commissioned with quite a good flock of pig that's growing. So I believe that the first products will be available to consumers in the Far East in September. And again, another question, whether you have reverted to your idea of launching a meat business in China. You know, it's possible to come into China at all these days. We do have a wish that should we get the terms we put forth, we would be happy to implement that project. Then now it depends on the Chinese authorities. About 18 months ago, or rather 16 months ago, we evacuated all of our team because of the COVID-19 pandemic. All of the talks have been suspended. But as soon as China becomes open again, we'll resume our talks with the Chinese partners. Thank you very much. Now I suggest we wrap up with this presentation and our today's session. Thank you very much for your questions. Thank you for your interest in our business. See you next quarter. Have a nice day.